Welcome to the Achievement Apex podcast, the podcast where I share my knowledge and experience on trading psychology, strategy, risk management, and everything else that you need to know to take your trading to the next level. I'm your host, Brendan Murphy, and without further ado, let's get ready to learn something new that you can use to improve your trading results. Okay, today's episode is all about how you can avoid biases and how you can think objectively in the market. So if you ever have emotions that cloud your judgment and they maybe sway your thinking into either putting on a long position when you should have shorted or putting a short position on when you should have gone long, this podcast is going to help you with that. So to get straight into it, the biggest emotional influences that you're going to have in your trading, they're always going to make you buy high and sell low, which is the opposite of what you want to be doing, right? You want to buy low and sell high because that's how money is made. So the emotions here is fear and greed. These two are the worst, and they're always going to bite you in the ass at the worst times as well. So greed basically looks like wanting more profits or more gains in the market when it's not there. And I've done a whole episode on greed in the past. It might be linked up in the corner if you want to go and watch that. Basically, so let's say, price makes a move upwards and it's like you've made some good profit, or maybe you missed it and you want to get in on that upwards move and make profit, but there's no more profit to be had there. That's the top. Well, you get greedy and you place a long position because you don't want to miss out, and then price dips and you lose. And then on the other end, you have fear, right? So fear happens when price is going down for a while, and then at the bottom, maybe you've lost a lot of money and it's like, okay, I can't stomach these losses anymore. I have to get out to stop my losses. Well, what actually ends up happening is when the losses become so much that you can't handle them anymore, it tends to happen around the bottom of the market too. So right at the bottom, when you're feeling extreme fear and then you sell, then you watch the market turn back up, and then you feel despair and you watch it go up, and then you get a little bit more confident in the market, and then it goes up even more. All right, now let's buy. Well, same thing again. You buy, it goes down, fear, greed, sell. It goes up, confidence, buy, repeat. And that's like the cycle of bad trades, basically. And this is what pretty much all beginners do too. They buy high and they sell low, and that's why 80% of traders lose money. And basically, the cycle looks like confidence leads to good trades, which leads to euphoria, which is like overconfidence, and then greed, and that leads to bad trades. And then the bad trades lead to fear, which leads to even more bad trades. And then at the end, then it's like, okay, the market starts swinging around. You're like, okay, I've got to take it serious now. Let's study properly, make sure I'm getting good entries. So then you take it serious, and that leads to good trades. Good trades leads to confidence, more good trades, overconfidence, bad trades, and so on and so on. And that's basically how fear and greed manifest themselves into your trading to make you lose money. Another emotion that you could be having that's causing you to overthink or maybe not think objectively in the market is doubt. So if you're looking at the market and you doubt your strategy, or you doubt your analysis or your approach, then you're never going to be confident. And if you're never confident, you're always going to be second guessing yourself, micromanaging positions, changing stop losses, take profits, entering again, scaling in, scaling out when you're not supposed to. And all of this just kind of mumbo jumbo going on in your head that is not doing you any favors. If anything, all it's doing is just adding to confusion, and then overanalyzing and over trading, and it's a bad run of bad situations basically. And when it comes to doubt, there's pretty much one main cause, and that's just not having a good strategy that you've back tested. So you either don't have a strategy, so you've got no reason to believe that the trade you're making is good, and so you doubt yourself, or you haven't back tested your strategy, so you have no reason to believe that your strategy is worth following, and so you doubt yourself. And then another emotion that you could have that could definitely impact your trading is stress. So if you're stressed, that's going to manifest itself as bad trades. So for example, if you need trades to go well to pay the bills, and you know that trades never always go well, you have bad trades, but when you need a good trade to pay a bill, that's ironically when you get the bad trades. And I'm speaking from experience here. I've been in that situation before. It's like, okay, I'm running out of money, I got bills coming up, I need to have a big winner so I can be safe, So it's like, okay, I'm watching the market. When can I get in? I'm going to pick the bottom. There, go all in. And then the market drops more. It's like, all right, I'll take a bit out. I'll try again. There's the bottom. You miss it again. And now you've lost half your money because both times you're going all in. And then it becomes even more important that you pick the bottom, and so you're even more stressed, and so you're thinking even less clearly, and that is also a bad cycle. So fear, greed, doubt, and stress are the 4 big emotions that you can be feeling that's going to lead you to be thinking irrationally and emotionally in the market. If you want to think objectively and avoid bias, you have to avoid fear, greed, doubt, and stress. What you have to realize is that the market doesn't care if you win or lose. The market is going to do whatever it wants to do regardless of what you do. And a common thing that beginners do in the market is they attach their trading outcomes to the market rather than attaching it to themselves. So for example, if I take a short position, market price rises and I take a loss, I say it's the market's fault that I lost because the price went up when I shorted. No, it's my fault because I chose to short the market when the data was there telling me to go long. I just couldn't see it because I was blind, or I was stressed, or I was doubting myself, or I was fearful, or I was feeling greedy. So basically what you have to do is take accountability. You have to realize that every outcome you have in the market is due to yourself. The market is completely unbiased. It doesn't care if you win or lose. If you take accountability and you're good enough, the market will give you millions of dollars. It literally doesn't care because it's going to do what it's going to do. And if you can predict what it's going to do, it will reward you for that. So how do we solve fear and greed? Step 1 is always follow your plan. And I mean always. Write yourself a commitment to following your plan. Say, I'm going to commit to my plan regardless of the emotions I feel, regardless of what the market looks like, regardless of this, regardless of that. No matter what it is, I'm going to follow it because my strategy says to follow it. The second thing you need to do to solve fear and greed is realize that winning is not conventional. The conventional thing to do when price is going well, you want to buy because you want to get in on that going well. When price is going poorly, you want to sell because you don't want to buy when it's performing poorly, right? Well, conventional wisdom would say so. But because winning in the market is not conventional, you have to act in an unconventional way. And that means buying fear and selling greed. When price is going up and everyone is greedy, that's when you can say, okay, if 80% of people lose and 80% of people right now are getting greedy and buying, what's going to happen? They're going to lose, so I'm going to short right now when everyone's overconfident and greedy, and then I'm going to profit because the price will drop shortly after. And then at the bottom, where 80% of the market is saying, oh my God, the market's crashing, we're in a recession, I'm taking my money out, I'm putting it in this instead, market's going crazy. All right, this is where money's to be made. Everyone is fearful. I'm going to buy that fear because it means the price is low and we're about to have an uptrend or a reversal. Hard to do because you yourself are probably watching it feeling fearful, right? It makes it even harder to click that buy when everything looks terrible. But that is where the money is made. Think about when you have a stock market crash and it loses like 50, 60%. At the bottom, everyone's going crazy. People are losing jobs, people are losing money, their superannuation is getting wiped out. So much fear everywhere. If you have money or enough money that you can just wait, all right, I know that the market's going to recover. It always does. It's only a matter of time. I'm putting my money in when everyone's fearful, and you wait a year or 2 years or 3 years, the returns are going to be incredible. And everyone's going to be saying, how the hell did you make all this money when we lost half of ours? And it's simple. You bought the fear and you sold the greed. The second thing is, how do we solve doubt in our trading? If the major cause of doubt is having no strategy or not backtesting your strategy, the first thing you need to do is backtest your strategy and make sure that it's proven to work. So you have to have a successful backtest. Create the strategy, backtest it for at least a year, and then say, all right, if I had followed this strategy for the last year, I would have been really profitable, which means you can now have confidence in your strategy so that when you place the trade, it's like, okay, I know the variables. This trade has a 60% chance of working out. If it goes well, I'm going to make 1.5 times my risk. And if it goes poorly, I'm going to lose this much. If I make this trade 10 times in a row, I'm going to be up X amount of dollars because I'm following my strategy and it works. The second thing you need to do to solve doubt is, again, make the commitment to follow your strategy no matter what. No matter what's going on in the life, no matter what's going on in the market, no matter what's going on with your finances, no matter what the market looks like, what you want to do, follow the strategy and make sure you've backtested it and it's proven. How could you be doubtful in a strategy that you have backtested and has been proven to work? You know it's the law of averages and it's going to work out over time. And then lastly, how do you solve stress? the first thing you need to do, stop trading. Realize, okay, I'm stressed out. I've got bills coming up. This is not a good environment for trading. Maybe my relationship's going poorly and I feel like I need to make money to solve that. Whatever it is that's causing you stress in your life, first, you need to stop trading, because you need to realize the stress is going to negatively impact your trading, and then you're going to lose money, and that's going to stress you out even more, and then you're going to trade worse, lose money, stress, and so on and so on. So you need to take a step back, say, all right, I'm going to stop trading. I'm going to find out what's causing this stress in my life, and then I'm going to address that. If it's bills coming up that you can't afford, maybe you need to look at what services you can cancel, or can you negotiate your agreement so that you pay less. If you're paying too much for a property, maybe live in a house with less rooms or something. Whatever it is, find out what's causing the stress, address that, and once you've addressed that and now you're not stressed out, then you can devote the time, the energy, and the commitment that you need to devote to the market so you can be successful. And so that concludes this episode on how to avoid bias and how to think clearly and objectively in the market. If you found these tips useful, feel free to like it, share it, all that cool stuff, and I'll see you again in the next episode. Bye-bye.